Hello, I'm Phil Middleton, Chair of the OMFIF Digital Monetary Institute, and I'm very pleased to say today I'm joined by Peter Weerts of the DNB, the Dutch Central Bank, who is very kindly agreed to be our principal guest today and to speak to us around the subject of CBDC, which I know is in everybody's agendas. I am your moderator today. There are over 200 of us on this call, seminar, roundtable, whatever, including from the Americas, Canada, the United States, Colombia, Brazil, Caribbean countries. So good morning to you. From all over Europe, too many to mention, so good afternoon to you. And pleasingly, many colleagues from the Asia Pacific region, including Korea, Thailand, the Philippines, Indonesia, and Australia. So good evening to you, and thank you for giving up your downtime to join us. At the request of the Dutch Central Bank, this meeting is public and on the record, which is contrary to the usual OMFIF practice. So just remember that anything you may or may not say is publicly attributable. Because there are so many of us, when we come to general questions, may I ask you to submit them in writing? Because only Peter and I are going to be visible during the question, the general debate session. You can do that either by going to omfif.org or by clicking the participant button, the chat button, at the top of your screen, or in some cases it'll be on the bottom right of your screen. If you tap that, if you type in your question, your name and your organization, my colleague Katie Ann will be editing, not editing is the wrong word, we'll be assembling all those and passing them through to me. We're then going to go through, I'm shortly going to ask Peter to present to us, following which we're going to have a couple of initial responses from two founder members of the Digital Monetary Institute. That's namely Mark Cliff of the Dutch bank ING, who's been doing a lot of work in this area and I believe is known to the Dutch Central Bank, and to Christian Lüttner from Giesecke and Devrient, a leading German researcher in this area, whom I believe is also known to the Dutch Central Bank. So they will be kicking off our discussion. And we're also going to request some audience participation. Now, as you know, CBDC, central bank digital currency, has recently and rapidly moved from out of the back office boffins into the governor's in tray and has become of much current interest. So just to gauge how much current interest, I'd just like you to answer the following poll question. All you have to do is tick a box. So do you think a fully operational central bank digital currency will be launched somewhere in the world by May 2023? And select either yes, no, or don't know. I'll keep this screen open for 30 seconds. Well, they're pretty conclusive. 84% think we're going to get one launched within the next 3 years. Only 7% don't know, and don't knows 9, and the don't knows outnumber the knows. Thank you. Well, that's that is higher than I was expecting. Let's see how Peter whether Peter will change us. We're going to run a repeat of that towards the end in slightly different format to see where we go. I would now like to pass the baton to our principal guest today, Peter Wirtz from the Dutch Central Bank, the DNB, who's led work recently on an excellent study which has just been published and to which we'll give you the link, which summarizes, discusses and assesses many of the key CBDC issues that are now facing central banks. And I commend the report to you and have great pleasure in asking Peter to take us forward, tell us all about it and answer our questions afterwards. Peter, over to you. Thank you.
Yeah, thanks a lot, Philip, and also for this kind introduction and the kind words about our report. Indeed, the report is just out and the translation is also now available, so everybody who wants to read it can get it. So thanks a lot also for giving me the opportunity to present like a few of the key messages of our report. And so despite the fact that it deepens the discussion on CBDC, it's still explorative. So that's why I also want to point to the usual disclaimer, which should be on my slide if it appears in a moment. And so it's still in a personal capacity that I'm speaking here. So what I thought I'll do is I start with a kind of key summarizing for you the key messages, and at the end I'm coming back to those key messages, and then the main part is how we got there. So all right. So the first thing is that I think what many people take from this report is that DNB signals now in public that we are ready to go forward with experiments for a general purpose CBDC. And as far as I know, that's the first country in the Euro area that gives this message publicly. And so you may ask, and that's basically the second message, why the Netherlands? And so what I'll show you is that the use of cash is the lowest in the Netherlands within the Euro area, and actually the numbers differ substantially across countries. Or put it in a different way, digitization has advanced the most in the Netherlands, and that brings us to why we think we should consider CBDC also in sort of moving to the experimenting phase. It's because of the contribution it can make to the smooth functioning of payment systems. And so this report is also for a broader debate, both within the Euro area and the Netherlands, also at the political level. And for our team, basically the next phase will be to deepen the work on operational design. And so I have a few ideas at the end of the presentation that I would like to share already for this next phase. And I hope that, because I notice also from like doing this kind of meetings that those discussions actually can give you new ideas. So I very much hope that it will give us inspiration to move forward in the next phase. So that's basically on the key messages. And so the next question is how did we get here? And let me start now with the usual introduction and start from the beginning also. And I should be able to move the slide forward, but it doesn't seem to work for me right now. Yeah, there it is. Yeah, so just to recall, what is central bank digital currency? I'm sure all you know that central bank money already exists in two forms currently: cash, which is for the general public but not electronic or digital, and reserves. So they are electronic. So in a way, central bank digital currency exists already, only not for the public as a whole. So what would general purpose CBDC be? And that's exactly here the middle of this picture. Issued by the central bank, digital, and for the public as a whole. And to further illustrate this difference between wholesale CBDC, which exists already, and general purpose, we made this picture of the main policy options. So if you start on the left with wholesale, so the left bottom is current reserve accounts, and many people, when they speak about wholesale CBDC, they imply going further in the technology. So for example, to make it programmable or to put it on a DLT platform. The same distinction you can have for general purpose. So the big difference here, and then we move like on the rows from accessible, yes or no, to the general public. We think that it actually is the biggest kind of structural innovation, or it would be. And since I mentioned already cash, so for us the main thing is the declining use of cash. So for us it would not be sufficient to only consider wholesale CBDC. So that's why we are considering the general purpose part. And also there you can distinguish between innovation, the degree to which you want to innovate in the technology. So that's the more kind of far-reaching reform. And so there has been for many years already a discussion specifically within the Netherlands. So of course, the last years, the international debate has been very strong. But as a parallel track, I would say in Dutch society, the discussion has also been very strong. And exactly for the reason I mentioned, the declining use of cash. And personally, I think that if you talk about something like so fundamentally different in terms of monetary design, it's worthwhile to also look at structural trends and not just to look at 1 year to the next what's happening, but over a long period. So that's why we made this chart. And you see that over more than 100 years, the use of cash goes down from 80% of the money stock to 16% is our latest figure. So this has been noted, especially also by the Scientific Council in the Netherlands. And so they released a report last year on the role of money and debt. And one of their recommendations is to consider CBDC. And that has led the government to request a study by DNB. And of course, we were very happy to do that. And of course, we were studying it anyway already. And so we published it. And that means that also the Minister of Finance has sent it to the Parliament. So it's also an input, you can say, to the political debate, especially also on the objectives. Because what I will show later is there are a lot of objectives always mentioned as to why we could consider CBDC. But it's also partly a political question, right? Why do you want it, yes or no? So we'll come to that. Then to illustrate further the euro area context. So what you see here is for the euro area, the share of cash transactions per country. The most recent data I had is for 2016, which is here from a report in 2017. At that time, it was 45% for the Netherlands. But in the meantime, the latest figures for 2019, which have just been released, show a decrease of 32. So basically what we see since 2010 is that that number declines by around 5 percentage points every year. And of course, this year is a special year with the COVID crisis, the Corona crisis. So we should see, of course, later the number, but it's clear that it's declining further and probably at a quicker pace this year. So if you compare that number of 45% in 2016 with Germany, for example, where it's at 80%, you see that the points of departure differ substantially across countries, and that's something, of course, to be taken into account in this discussion in the euro area. At the same time, it's my impression that the interest also within the euro area and the sense of urgency has increased substantially, especially in recent times, due to the developments with the issuance of private digital currencies, so asset-backed cryptos or stable coins, however you want to call them. And as I said more recently, also with the crisis that we're in right now. And that's why also why we submitted this report as an input in the discussion in the euro area. So that brings us to the next part of the talk, which is on the link between, you can say, objectives and design. Because if you want to have a good design, the first question is, okay, what is your objective? So we started by surveying the literature and the several surveys that have been done, also by OMFIF. I think they were very useful. And that's why we made this pyramid. And what I found striking as a lesson from that is that if you look more among the policymakers, it seems that they agree most on objectives related to the functioning of payment systems. At the same time, we know that there are also debates going on the effect of CBDC on monetary policy, what are the effects on financial stability. But my impression is, and that's a personal impression, is that the degree of discussion is much higher there. In any case, since cash is declining so rapidly in the Netherlands, it made us think again, why do we actually have a public form of money for the general public? And put it differently, what would the payment system look like if you don't have that public form of money anymore? And to come to such a situation, you actually have to go back several hundreds of years to see when that was the case, because it so happens that in the Netherlands, the Bank of Amsterdam, they started to introduce fungibility between different types of money in 1609. So we even refer to that history episode in the report. So the thing is that private money, which is more and more dominating the payment system, is very convenient. So you may ask yourself, why do we actually need a public form? And do we need it at all? And we think the answer is yes, because the kind of right balance between public and private forms matters, especially in times of crisis, in times of stress. So you see that in times of financial crisis, the demand for cash is going up. Also, the idea to have a backup for disturbances in private form of money. And also we thought hard about, like, what would the market structure be if we would have a system with only private money? And since payments industry is a network industry, you could get kind of winner takes all effects. So also issues of market power, issues related to diversity, because at the current stage, the fact that we still have cash gives actually people an outside option for their bank accounts. And what if that option is less and less used? What happens then? And finally, the use of data, also very important. So we see that a lot of the entrants in the payment market, they have as their business model the use of those data, but consumers and users often want privacy. And so the central bank or more generally the public sector, if they in issuing money, they have a different incentive set. So there would not be an incentive to use the data for commercial purposes. So those are in sum the main reasons for us. There are other reasons that probably are more important in other countries. They're also mentioned here, but in the interest of time, I will skip that part, so that we can move on to the broader effects on central bank tasks. And so this is something, this introduction of CBDC is, since it's a fundamental reform of the monetary system, basically, it has effects on almost any central bank task. So we had a really broad project group from all parts of the central bank, and we analyzed all these different elements in the report. So monetary policy, impact on the central bank balance sheet, the monetary transmission. Basically, the idea that CBDC would mean a larger central bank balance sheet and a stronger footprint of the central bank in the financial system. And that's actually a reason to be cautious in going too far in issuing a CBDC. A similar argument for financial stability reasons, the idea that you would disintermediate the banking system. So how much would you actually need of CBDC, and how does that compare to the amount of deposits in the system? Isn't it too much? And we think it should not be too much. It should be just enough to fulfill the objectives. And digital bank runs. And the third part is related to supervision. Obviously, any CBDC, like any financial services, should be regulatory compliant. And that's one of the reasons why we have a preference for a model of intermediated issuance, just as we do today with cash. So it's issued through the banking system. But I think that on those parts, our report is pretty much in line with what you've seen from other central banks and policy institutions around the world. So let me move on to the design then. I think that is the main question going forward. So we have two parts in this presentation: monetary design and operational design. So let's start with monetary design, because it links very well with what I just said about the impact of monetary policy and financial stability, which really indicate the need to be restrictive in a way, not to bring it too far. And so first question you can ask is, like, how much CBDC would actually be needed? And so we looked at several ways to estimate that. One is to compare it to cash currently in circulation, both now and in the past, before there was the trend from cash to bank deposits. But you could also think differently, you know, if you say that, okay, CBDC is needed for basically payment functions and the smooth functioning of payment system, how much would people need then in kind of a stress test scenario? So for example, if you say living costs of at least 1 month plus some buffer, well, actually that gives a number, if you do that, very similar to what you get in terms of cash currently in use. So we mentioned some numbers of like perhaps 3,000 to 4,000 per capita, but that's very indicative. It's also to get the discussion going. The next thing is who has access, because if it's based on an account, you have to know the identity of either the company or the natural persons. And so you need to think about restrictions. So as a suggestion, we say, okay, limit it to natural legal entities from the euro area. And then there is the issue of what to do in terms of crisis. So what if you have a flight to safety, a run towards CBDC, and how are you going to stop that? And basically the kind of the way that literature is developing is that I see a discussion going on between the pros and cons of hard limits and so-called two-tier system, which has been introduced by or described very well by Ulrich Binzahl, who will be, I think, the next speaker in this series. So the idea is there that you start thinking with the first question, how much would be needed, and that you provide incentives to hold that amount, but then you start providing disincentives for any amounts higher, for example, by giving a negative or lower interest rate. But then the debate is, will that be enough in a crisis? Because we know that the flight to quality can be extremely strong in a crisis, and that leads us to the discussion on the possibility of hard limits. But also hard limits have their disadvantages. So for example, they may bring a crisis forward, or they may actually challenge the fungibility between different types of money. And yeah, so that's where we are currently. And of course, any insights are very welcome there. Then we go to the user perspective. So as we think more and more operational, the question of like, will CBDC be used is coming more and more to the forefront of the debate, I think. And part of that question is, will actually users understand the difference between CBDC and bank accounts? Because at first sight, it's very hard, I think, to see the difference. So that leads us to think about, for example, branding. How do you brand CBDC? And also, how do you issue it? In any case, if you want sufficient demand, it should be at least as good as the current private solutions. And that, again, I think points to the use of private intermediaries in issuing CBDC. Which brings us to the next one. And I think that, as I said in the beginning already, that could be one of the really nice topics for the discussions, which is the operational design. Now, it's the case that just before we published our report a few weeks earlier, fortunate for us, the Bank of England came out with their report on CBDC, and we were very pleased to read that it very much went into the same direction as our kind of thinking. And that thinking is represented here. So we actually liked so much the picture of the Bank of England that we just added one sentence to our report and quoted it. Because it's very communicative. And so you could think about the core of the system as accounts in the central bank ledger and sort of the back end. And then the next question is, how do you make the link to the front end, to the actual payment market? And how do you achieve interoperability with a wide range of payment purposes in the economy? So both at point of sale, both in the internet economy, both at internet platforms, and also at wholesale platforms that may use DLT in the future. So the current thinking is that for the kind of more traditional accounts, you could use payment intermediaries, which can also be banks. And of course, that should all be regulatory compliant, especially Payment Service Directive and Anti-Money Laundering Directive. But another way of thinking is that based on those accounts in the core ledger, and they can be both the wholesale CBDC and the retail CBDC, you may build additional tokens, and those tokens could be either private tokens, so think about Libra, think about utility settlement coin, think about JP Morgan coin, but that could of course also be a token issued by the central bank, so a CBDC token, and that gives you the interoperability with the platforms. So that means that you can reach a whole different ecosystem starting from the core accounts. And so these are a few ideas to stimulate that discussion. And interestingly, if you look at the proposal for an experiment by the Banque de France, which they've recently issued, it very much goes in this direction for the wholesale market, where they say we start also from accounts, so that's similar, but on top of that we would introduce a token, and then allow for basically saving in transaction costs in DLT type environment. Finally, the operational design has a lot of issues around privacy. The point here is that by design, electronic form of money is never as private as cash, because for cash there is no ledger. When you do a transaction here, there is a ledger. So you need to build it in the design. And so we have some ideas, but that's a bit too far for this introduction, because I see time is running out also here. So let me come then to the conclusion and the discussion. I would very much look forward to it. So that brings me basically back to the start. So we have a favorable attitude towards general purpose CBDC. We are ready to move on with experiments over the period ahead if the ECB decides that that's also a good idea, because we have the euro. That's a very specific legal setting that we're operating in. And our favorable attitude is mainly due to the possible contribution that CBDC can make to the smooth operation of payment systems. And for the months ahead, we submitted already this paper as input to the ECB discussion, and our task is to move forward with operational design. Thanks.
Thank you, Peter. That's excellent, and thank you for giving us such a comprehensive overview. I have to say, one of the things I really enjoyed in the report was your account of the development of the Gilder as promissory notes for specie, which I thought was very illuminating. And before I pass to Mark and Christian, that led me to think, I doubt there is anybody on this call who couldn't give a detailed and correct explanation of the difference between public and private money. But I suspect amongst the many millions who are not on this call, most consumers probably would not understand this at all. And I think once they do understand it, particularly in a zero interest rate environment, why wouldn't they immediately run off and have their accounts with the central bank? So where do you see the central banks going in terms of communicating with citizens about this? And is it a major problem?
No, yeah, so I fully agree with you. And so one of the things we are discussing internally is how to do the branding. And that's basically the next step. How do you explain to the consumer? How do you reach the end user, first of all? And so if you're using cash, then actually you see it's a note or a coin. It looks very different from an account. CBDC would look very similar to an account, whatever way you present it. And actually we did those tests with students who asked for this, and I asked them exactly the same questions, and they also didn't understand the difference. They said, why would it matter? I have an account already. And then when you talk deeper, they start to see that, oh yeah, wow, yeah, it is actually something else, because a claim on a private institution is not the same as a claim on a central bank. And then they actually were quite keen to have that product, you can say. And I think that awareness campaign would in any case be a part of an actual launching CBDC.
Let me pass the baton now over, please, to Mark Cliff, who's Global Chief Economist from ING, and he's done a lot of fascinating work with his team on this subject. So over to you, Mark.
Great, good. Okay, well, first of all, thank you very much to OMFIF for launching the institute. I think this is an excellent initiative, and I would commend Peter and his colleagues for their excellent paper. I think this is a terrific way to launch this webinar series. Well, as obviously the first commercial bank as a founder member of the institute, I'd be somewhat remiss if I didn't ask Peter a question that is related to the impact on the commercial banks. And so I thought I'd start, and if you allow me, I'll ask another question in a moment, but I think this is probably a good one to start with, which is, what do you think the impact of launching central bank digital currencies will be on the commercial banks' business models, their balance sheets, and indeed their profitability?
Yeah, I think that's a very good question. So there is a part on that also in the report. So we asked our colleagues from supervision, and since CBDC will substitute partly for cash and partly for bank deposits, there would be an effect, of course, on the bank business models. And to the extent that you see a substitution of funding to the central bank, that would be a negative impact. And so the question is really, well, there are several questions related to that. A first question is, to what extent does that in a way correct for a previous substitution from cash to bank deposits? So it's not just one way, you know. So if you see it in a longer time frame, it's a different discussion. But the key point is also like how big it would be. And so since there is a paper by Ulrich out now, Winseil, he has some estimations on if you have like 3,000 euro per citizen, that would mean a little more than 1 trillion euros of CBDC. And that actually is comparable to cash, and it's very comparable to other components on the central bank balance sheet. If you compare that to the amount of deposits in the banking system in the euro area, and I've looked up those numbers, you see something in the order of 10 trillion. That's the data I found on the ECB website. So it is a substantial impact, but it's also not like everything is moving immediately into CBDC. And of course, it would be a very gradual start in any case. And I think the whole debate on intermediation and kind of uncertainty is a reason to start very cautiously. And for banks, it would mean also that on that part, their business model would change from earning from the interest margin to more fee-based driven business. So there are also new opportunities from lower transaction costs and providing the payment services actually in CBDC.
Mark, you had a follow-up question.
Yes, indeed. Yes, thanks very much. I'm just sort of fiddling with the sound here.
Well, while you're doing that, can I just intersperse and say that with my citizen's hat on, at the moment, I can walk into ING and get my entire account withdrawn in cash, in euros. If you're now proposing to put a limit on what I can have in central bank money, isn't that a restriction of my monetary freedom?
We should realize that there are physical limits to the use of cash. So you could go to the bank and take all, but you probably would not do it. But with CBDC, you could actually do it electronically. And that means that the kind of physical restrictions we have on cash, we need to think of something that we can replicate something, because we don't want actually everybody to run to the central bank and disintermediate the banking system, because we very much need the banks to provide credit to the economy. And we don't think that the central bank is the right place to do that. So it has to be a fine balance and a nice mix of public and private forms of money. That's what I would say.
Mark.
Okay, yeah, sure. So I think maybe I'm just anticipating the next round of your studies here, Peter, but I thought it'd be interesting just to see what your thinking is at this point on how to fund, build and maintain a new retail payment infrastructure. And specifically, what is the Dutch central bank's appetite to add an ancillary payment system on distributed ledger technology, essentially as the payment leg to settle all these distributed ledger transactions?
Yeah, thanks. So those are a lot of questions at once. Maybe let's start with the kind of payment infrastructure that you need for CBDC. So we have a dilemma there. So on the one hand, we want to have a separate infrastructure, because if there is a crisis or a disturbance, digital disturbance in the regular infrastructure, you want to have a backup. But that would make it also more expensive. So there is a trade-off there. And we don't have the full answer yet. And we think that that's one of the things to study very hard, like to what extent can you really separate the infrastructure in CBDC? And to what extent do you need to rely on, and actually want to rely on what's there already by, as we saw in the picture, using private payment providers. And then the other thing is indeed, like, you know, you have so many questions at once with CBDC, because one thing is getting to the public at large with having a basic payment services, a general account. But then there's also the element of the new technology, which is much more at the forefront. And that's where, in terms of operational design, I think you need separate solutions for different elements of the payments arena. That's the current thinking. So as I already said in the presentation, you could think of something like a simple product for the consumers, issued through the private sector, regulatory compliant, but at the same time continuing the discussion and the development of token-based solutions for DLT platforms that are also, of course, out there, and that will also develop further over the next years. So I think you need to have different ways of doing that, and that will probably also require different types of experiments going forward, but all on a personal basis, because indeed we are moving towards the next phase now.
And I think maybe for today, a very big area for debate is going to be the degree of partnership and cooperation between the public sector on the one hand and various elements of the private sector on the other, be they technology suppliers, be they commercial banks, or be indeed they other actors. Can I pass the baton over? Thank you, Mark. Can I pass the baton over to Christian, who I believe has a couple of questions? Christian from Giesecke and Devrient. Yes.
Yes. Hello, everybody. I hope you can hear me.
Yes, loud and clear.
Perfect. Well, thanks. First of all, hello, everybody, and thanks to OMFIF for organizing this webinar, and thanks for everybody on your screens to participate there. And I hope truly that everybody is safe and healthy, especially in those crazy times. So my name is Christian Juttner, and I'm heading corporate development for G&D Currency Technology. So thanks to Peter, first of all, for very impressive presentation. So I truly liked it. And as shown by Peter earlier today, so there is two forms of central bank money that exists today, but only one is truly accessible for the general public, and that is cash. And now the thing with cash is it does have some disadvantages maybe, but it really has two major advantages that I see, and that is it's inclusive, so you don't have to pay any fees, you don't have to register with any commercial organization, you're free to use it, and you don't also pay by your data that you might give with the cash. And by that, it's a truly anonymous payment means. And in many societies, this is truly a high value that we see. And my question really to you, Peter, is do you see a mandate for central banks to really carry over those advantages of cash into the digital world when moving towards digital currencies?
Yeah, thanks. That's not a very good and also difficult question. First of all, let me say that there is also active policy to support cash, also from the Dutch Central Bank. So it's not like CBDC is now the substitute for cash. You know, the assumption is they're gonna live next to each other. But at the same time, it's the case that the consumers, at least in the Netherlands, they clearly indicate that they want to, in a way, move forward to the digital world because they're using cash less and less. Now, then I agree with you that cash has a lot of very excellent qualities. So on the anonymity, etc. But it's not like, you know, I'm not sure if we would today develop a means of payment from scratch that cash would be the thing, because this anonymity also can work against you when you talk about high values and anti-money laundering. And that is the kind of point where, of course, the CBDC should be also compliant with the regulations. And the fact that you have more data also means that if you have to use them for those kind of public good purposes, that you have to use that also. So I'm not sure whether we can replace cash on all those aspects. And I also think that's why that we should be careful comparing CBDC to cash, because CBDC will be a new thing. It will have different characteristics, and it will not be a digital substitute for cash. It will be, that's my personal opinion, a truly new means of payment. And we should start from the beginning, from a public perspective. What are the kind of characteristics that we want? And then try to build them as much as we can with the limits that we also have, but as much as we can into the design.
Maybe I'm allowed to ask a follow-on question also, because I also saw on your one of your slides that says, well, we might even restrict it to the euro area or to natural persons or companies in the eurozone. So I find it hard to imagine how this would be done. I mean, especially if you talk about token systems or tokenized systems, how to restrict that really to a member of the eurozone or not.
Yeah. So our thinking is currently that when we start from the basic infrastructure, that it's most likely to be account-based. And that means that you have the identification for the account holder. And the reason is that a purely token-based system would be vulnerable to hacking. And if you have that, that means that you can, since it's digital, you know, you can copy it forever. And that means that you can start all over again. So that explains why we start from the account-based system. And in that sense, you could restrict it. And indeed, that's very different from cash, because I think perhaps like if you look at euros, a lot of them are actually held by non-euro residents. And indeed, if you would have a purely token-based value system, which is not based on the identity of the user, but on the characteristics of the token, that would be something indeed a quite different system indeed. Yeah.
Thank you.
Thanks, Christian. We've got a whole slew of questions coming in. First question from François T of Euroclear Bank, who says, Peter, as we've read recently, Libra is changing and adapting its business model to collaborate with central banks and governments. Would you consider discussing with them and gaining some of their intelligence in this field? Remembering this call is on the record.
Yes. Yeah, of course, we are also, of course, we need to speak to each other. And also on the record, a report has been published by the Financial Stability Board with a regulatory response to stablecoins with high-level principles. And it's indeed like almost the slide on operational design that I showed you. Gives some thinking indeed in linking the token-based world to the CBDC world. And for me, a big open question is whether we would go forward with what some people call synthetic CBDC. So in the Libra case, then it would be that the claim of the user is on Libra, but they have their backing indeed in euros, which gives them, of course, a credit risk, or that you build a token in such a way that it's directly in our case, a euro that can be used on the Facebook platform. And I think that is it's really the discussion going forward. And as I said, that links very much. The Banque de France is already going for experiments on this issue in the wholesale domain, because there we also have similar stable coins, like as I mentioned, utility settlement coin and JP Morgan coin, and there you have a similar question. And I stop there.
Does it not also, if you have tokens that are 100% backed by fiat money or real assets, is that not also potentially deflationary? Is it not taking money out of the commercial bank system and hence reducing the availability of credit?
Well, the thing is that if you do that kind of backing, that brings back we mentioned already the Bank of Amsterdam, the exchange bank. So they maintained 100% backing for giving out a bank guilder. That went well for a very long time until the Bank of Amsterdam started to do lending. And then ultimately there was a run on the Bank of Amsterdam, and that's why basically it's not the first central bank ever in the world, but it was replaced by DNB. And the reason is that there is a conflict of interest between the holder of the coin, so that the manager of the assets, and the holder of the coin. So the holder of the coin wants stability, but if you manage the assets, you are sitting on a big pile of assets where you're not doing much with. So the temptation is there to start using it. So there is a conflict of interest, and that's why I think that it would be safer to have a direct link to a fiat money.
Carlos Vinuela from Banco de España is asking about what's the optimal limit for the bank in order to mitigate the risks stemming from a migration from bank deposits to CBDC. For example, is it the 2 tiers that Ulrich proposes? Is it caps on demand? And would you restrict it to Euro citizens, or would you allow third parties to have access?
Yeah, well, that's a really excellent question. My answer is I don't think we know already. We have to experiment because we don't know the behavioral responses. And so once there's CBDC, suppose you have a flow from the banks to CBDC, the central banks can also react. And we don't know all these reactions, and that's a way to start cautiously, I think, with small amounts, and then to see how it goes.
I mean, a number of people are asking about, I mean, within the Eurozone, would you want, in principle, to let people have non-EU residents have access? I know your paper, you see this potentially as a way of establishing the euro as a global reserve currency. So that would suggest you would like non-resident holders.
Yeah, exactly. So that's the point. The deeper you dig, the more trade-offs you find. So there's a trade-off between, on the one hand, limiting the size of the central bank balance sheet, so restricting access. On the other hand, the international role of the euro. So if you want that, then indeed it would be, you would give more international access also. And that's, I think, also part of a political decision to be made.
Another common question that's trending for us is, including from Sky Go from Suferium, is, well, do you have a view on the moment on the architecture of the CBDC token, the UTXO model that was just recently announced by the PBOC?
No, I have no comments on the Chinese model. No, thank you.
I mean, do you think that how would CBDC, I don't know who this has come from, but a couple of people, how does CBDC offer the basic payment functions, including basic card functionality? And I suppose there's an assumption here that you would hand over the running of it to Visa or MasterCard or Amex or any other card provider I haven't mentioned.
Yeah, so that is also one of the things we need to think hard about, because we have several options there, and one of the options is to build it on existing infrastructure. but there is also the European Payments Initiative, and the idea there is to kind of build also more European payment structures, and I'm personally not the expert on that, but you could imagine linking the two topics, and that would mean a link to of CBDC to potentially new front-end solutions. And I think that's also one of the questions for the future.
Mark and Christian, do you have some more responses here? No, in which case I will pass to a question from Alexandre Chailloux, who works for the IMF in Washington, DC. Question about monetary management implications of CBDC, saying that potentially CBDC will not be a perfect subject to traditional reserve because it doesn't have the commercial money, the fractional reserve commercial money creation power attached to it.
I'm not sure if I understand the question.
I think the question really is how do you see CBDC as affecting the central bank's ability to exercise monetary policy?
Yeah. So our experts looked at that and they said that it will have effects because it gives you an option. Now, of course, currently monetary policy is conducted through the reserves with the banks, and cash has 0 interest rate. And now you have an option also to put interest rate on CBDC. So potentially you have a new channel. But I think you should be very careful with that from a payments perspective, because if you have like the first tier, as we mentioned it, and that is what you want people to hold, and then you're going to reduce interest rates in a crisis, which is exactly when people want to trust on their money. I think that from a purely payment perspective, that would not be a good thing.
Mr. Mohammed Mahbub Alam from the Bangladeshi Central Bank, welcome, says, how will lending operations and setting of interest rates be adjusted? So I think this comes to the question, do you think it's a good idea for CBDC accounts to offer interest? I mean, at the moment it's a moot point, of course, but yeah. At some point in the future.
Yeah. Now, in our proposal, for the moment, we say that it would, in our study, we say it would make sense. Basically, very similar to bank deposits. Because on the one hand, you want it to be used. So if it's lower, then people would prefer bank deposits. You also don't want to distort competition. So it doesn't make sense to put it much higher. So that brings you automatically to something very similar. But there is another question here on the monetary management, and maybe that was also mentioned. And a crucial question is, what do you put as assets against the CBDC accounts on the central bank balance sheet? And sort of the starting point is that you have the traditional, like of course, government bonds, refinancing operations. But if you have then a run to the central bank, that means that actually you could also have another option, which is lend that money back to the banks. And there are some studies in the literature say that actually CBDC would give you more opportunity to see a bank run in real time because you have all the information there. And if that's a problem for the banking system, you can lend that money back to the banking system. And that money for the banks, that funding would not be subject to the usual reserve requirements for banks. So currently, if you put bank deposits, then banks have to have like a small percentage as reserves in the central bank. But if you would do that, funding the banks back, then you don't have those reserve requirements. And that could even have a positive effect. At the same time, it also means that the central bank would take on credit risk doing that. So also there you see how many trade-offs there are really in this debate. And by the way, that's also how I see, that's how I see also my role as a policy advisor, is to eliminate those trade-offs and for the decision makers to then take the decisions on that.
And one thing your paper does make very clear is that under pure extensive version of CBDC, the activities of the central bank and indeed the risks that it incurs become ever more complex and ever greater.
Yeah, yeah.
Before we get to formal wrap up, and we're due to end at 3 p.m. London time, but I think we're happy to continue a little after that for those who wish to. Could I revert to the second poll that I alluded to at the beginning? Ben, if you're still awake. A lot of us thought there will be one launched in the next 3 years. Just for a bit of fun, please could you indicate which of the following you think, as a result of this discussion, is the most likely location? This will be on screen for 30 seconds. There. Right, overwhelmingly, 2/3, so still 8% of respondents think that there won't be one, but of the 92% who do, overwhelmingly people think it's going to be in Asia. Only 13% think that the Eurozone will get round to it, and the prospects for one happening elsewhere in the world are seen as even lower still. Peter, do you have any views on that?
Well, I would also vote for Asia, personally. Yeah. Yeah, but
Right.
also maybe Sweden, Canada, they're moving ahead. So I think those are also, Sweden has been very active for many years already. And of course, many smaller countries like Bahamas are also moving ahead. So
yes, I have to say personally, I think it's going to come from if not from China, it will come from a smaller country.
yeah.
And
yeah.
of course,
yeah.
Because going back to your slide about the policy imperatives, there are some very practical reasons for doing that. Replacing physical cash in small island economies, for example, because moving cash around, the notes get damp apart from anything else. I think as well, my black horse would be the United Kingdom, because I think Brexit potentially gives the Bank of England some very interesting opportunities, but more about that later. A question from I think it's from Dr. Wolfram at G&D, but asking really, are there NCBs within, so national central banks within the Eurosystem, who are ready collectively to experiment with sandboxes, proof of concepts for a Eurozone CBDC, or do you see everybody going their own way at the moment?
No, that is. I think that's for the ECB actually to answer. That I would step outside my role if I would go into those kind of Euro area discussions much further. So I would recommend to go to the next session with Ulrich Binzahl also on that.
Yes, I was going to say one could ask Ulrich directly. I mean, we see an awful lot of experiments going on worldwide, not only just within the Eurozone, and an interesting tapestry of individual initiatives, cooperation, collaboration, and so forth. And we think that'll happen for some time.
Yeah. Yeah, and of course there is a cooperation going on in the BIS where the ECB also participates, in the Bank of England and others.
Yes.
So you generally, I think you see a big increase in cooperation, and it's clear that many central banks are moving forward into the direction of experimentation, and the Dutch central bank is certainly one of them that wants to go that direction.
I think the OMFIF sense is that, with the exception of the Eurozone, developments in CBDC are, for obvious reasons, going to be confined within national borders. And this whole question of international interoperability and indeed standardization, I think, is going to be a very major one in the years to come.
Yeah, I fully agree. I fully agree. And of course, in that respect, the Euro system has an advantage because you immediately coordinate among each other. And we do have target running for so many countries. And on the one hand, it means that for a country like the Netherlands, we would probably go slower. But on another hand, it means that if we do something, we do it in a coordinated manner with all our colleagues in the Euro system. And so that's also an advantage, actually, in terms of interoperable design.
I have to say, personally, I rather like this design with the portrait of Her Majesty on, and I think it's an important statement of monetary sovereignty. But that's for another day. We are coming close to the formal end. If there are any questions, remaining questions or observations, please get them in now. And if not, I would very much like to thank you, Peter, and the DNB for this. It's been a fascinating presentation. Been a very, very good discussion. Thank you for people for all the questions. I hope this won't be the last occasion on which we have these conversations. And thank you for everybody for joining. Good night, sleep tight to colleagues in the Far East. Have a good day to colleagues in Europe and the Americas. And please, everybody stay well. Thank you all very much indeed, and see you again anon. Thank you.
Thank you too. Thank you for having me.